If you are new to accounting or business, you need to understand how the accounting equation works. If you don't know how it works or need a little refresher, you have come to the right place. I'm Professor Capko, and I'm going to walk you through some examples of how the accounting equation works. If you're new to my channel, please subscribe and hit the notification bell so you never miss a tip or trick. If you have watched my videos before, welcome back. Consider sharing this with others learning about business and accounting. Let's get into it. The accounting equation is assets equal liabilities plus owner's equity, which is sometimes called shareholders' equity or stockholders' equity. If you're new to this, I recommend you take a look at my accounting equation video, which I link to above, to learn about what the accounting equation is comprised of. In this video, we're going to build upon that knowledge and show you how the elements of the equation interact with each other. The best way to do that is with some examples. Make sure you stick around to the end of this video to see one that trips up a lot of people. In our first example, the owner is starting their company by investing $50,000 cash into the company. The assets increase by $50,000 because of the infusion of the cash. The accounting equation must always balance. So the left side increased by $50,000. The right side must also increase by $50,000. The company didn't take on any liabilities, so the $50,000 goes to increase the owner's equity by $50,000. So we have $50,000 on the left side of the equal sign and $50,000 on the right side of the equal sign. Our equation remains in balance. Good job. Our second example, the company is going to use $20,000 from the cash from the prior example and purchase inventory to sell. So on the asset side, the cash decreases by $20,000 because it is paid to our inventory supplier. However, in exchange for that payment, we receive, or the company receives, $20,000 worth of inventory, which is also an asset. So our assets simultaneously increase by that amount in the inventory category. There is no change to liabilities because none of the money is borrowed. Since our assets remain the same in aggregate, and there is no change to liabilities, we know that the owner's equity doesn't change because our accounting equation must remain in balance. In our third example, the company purchases a delivery vehicle using part cash and part a loan from a bank. More specifically, the $25,000 vehicle was purchased by placing $5,000 cash down and borrowing the remainder from the bank. The vehicle is an asset with a purchase price of $25,000. So our assets increase by $25,000. But that's not the end of the story. Our cash, which is also an asset, decreased by $5,000, which was the down payment. So our assets have a net increase of $20,000. The $25,000 increase minus the $5,000 decrease. The company borrowed $20,000 from the bank to make this purchase. So the liabilities increased by $20,000. The assets increased by 20,000 and the liabilities increased by 20,000. So our equation remains in balance and no change to owner's equity is needed. In our final example, which is a little trickier, the company receives a $300 electric bill. Even though the company does not plan to pay the bill until next month, it must recognize that bill as soon as it is received, because the company is on accrual accounting basis. To better understand accrual accounting versus cash accounting, check out the video linked above. If you do find this helpful so far, please give it a thumbs up. If you want more content such as this, let me know in the comments below. In the description for this video, I have some ways you can help support this channel, including buying my books. And now, back to our example. Here, the $300 is owed to the electric company, so it is an increase in liabilities. The company doesn't pay it right away, so there's no decrease in cash or any other asset for that matter. So if there's no change on the left side of the accounting equation, but the right side liabilities increased by $300, how do we keep it in balance? Put the answer down in the comments below if you know. That's right. We have to decrease owner's equity by $300. As you can see, owner's equity is often acting like a ballast for a ship. It is increased or decreased to help keep things in balance. I don't know. I don't know much about ships, so that might be a terrible example. But I think you get my point. So now you know a little bit about the accounting equation. But there is so much more to learn. Check out the videos I have specifically chosen for you. And until next time, keep your grade alive and subscribe. This is Professor Capko, and thank you for joining me on this video. And again, if you have further questions or want private tutoring, reach out to me in the comments below. Thank you.